Today on the Blockchain Report, Bitcoin sitting pretty above 117K and Wall Street's finally taking notice. On-chain data points to 130K in our near future, and no one's taking profits until their barista starts quoting Michael Saylor. Plus, Bank of America just named Bitcoin the best performing currency of 2025, beating every fiat on the planet without even having a country. All this and more on today's show. Let's go! Good morning, my digitally deranged defenders of decentralized dreams. I'm Hank Hudson, coming to you live from San Francisco, the city where the rent is high, your barista's side hustle is running a lightning node off of his solar-powered van, and Waymos are everywhere, causing chaos on the streets. It's Friday, the day the markets pretend to be sane, and everyone else checks their portfolios while pretending to work from that overpriced co-working cafe that smells like oat milk and panic. And speaking of pretending, Bitcoin's not. We hit new all-time highs last night, nearly 119K. Yes, $119,000 of Bitcoin. Hope you enjoyed being early, because at this point, even your grandma's bridge club is asking how to set up their cold storage wallets. Now, optimism, gang, it's high. Hopium is higher. And if you listen closely, you can hear the sound of maxis everywhere muttering, "I told you so," in between sips of raw milk. Meanwhile, institutions are piling in like it's Black Friday at the ETF store, only instead of TVs, they're fighting over finite sats, baby. But before we break down who's buying what, do your job, smash that like button like it just rugged your mental health, and follow RoxomTV and me at Hank at RoxomTV everywhere in the world. We're on all the social media platforms. Check us out. Now, let's close out the week like true degenerates, fully caffeinated, wildly overexposed, and riding the wave straight through the halving horizon. But before we do, let's take a peek at the numbers in this morning's Market Rundown. Let's do it. Okay. It is a green morning. It's a great way to end the week. Right now, Bitcoin at all-time high levels, just underneath 118K. We are feeling great. Huge surge yesterday, and we have two special guests that we're going to be bringing in to talk about it in just a bit, so stay tuned. The rest of the market seeming to follow Bitcoin's lead. Ethereum jumping up right beneath that $3,000 mark. Is altcoin season finally on the horizon? Some say yes, others say maybe not. We'll talk about that in just a bit as well. XRP having a morning, up over 11% now to $2.83 a coin. Cardano up nearly 14%, sitting at just beneath 77 cents a token. And last but not least, bringing up the rear, we got Dogecoin finally eclipsing that 20-cent mark again. Bitcoin went big yesterday, and all the altcoins seem to follow in its wake. It has been a great 24 hours in the cryptoverse. In TradFi, not as great. Dow Jones right now down about 0.7% this morning. The NASDAQ composite sitting pretty right around 20,600. And the S&P as currently at about 6,250, right around that area. MicroStrategy, as we know, where Bitcoin goes, Michael Saylor is sure to follow, and their stock price is definitely reflecting that. They're up $13 a share today. That's a little over 3%. Coinbase, surprisingly, despite all the very bullish momentum we've seen in the crypto market in the last 24 hours, they are down about 5.5% this morning. Tesla sitting around 308. Nvidia up 1.5%, right around that 166, 167 mark. And GameStop right now, right beneath $24 a share. They've seen a nice 3.5% uptick this morning. Well, we got a lot to cover on today's show, but we're going to take a quick break first, and when we're back, we got two guests to go over the top stories of the morning with us and much more, so stay tuned. We'll be right back on the Blockchain Report.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back. It's time for this morning's Bull Run, and we are joined by not one, but two guests on our Bull Run this morning, so let's get into it. Our first guest is a crypto builder, a fintech operator, and a one-man wrecking crew for bad infrastructure. He's the head of crypto at Alpaca, founder of FTXvote.com, and a key player in the FTX bankruptcy, representing over $1 billion in claims. He's scaled startups, led exchanges, and built systems that actually work in crypto, which is saying something. Please give a big blockchain report welcome to Arush Sehgal. Welcome to the show. We are thrilled to have you, and so is our audience. How are you this morning? It's great to have you.
What's up, man?
Report.
Great to be here. Thank you for having me. Head of crypto at Alpaca. Yeah, I had a unfortunate experience with FTX, like many others. And that's a pretty crazy story, actually, if you want to get into that later.
I think we'll have to get into that later. I'm probably not the only person here salivating to learn more about that whole debacle. But while we got you, Arush, here, first, give us a little bit of insight into your background. What brought you to Alpaca today? We're dying to learn more.
Yeah. Okay, so I'm an engineer by trade, serial entrepreneur. I built a credit card company out of San Francisco 10 years ago. I built an ATS, like a regulated exchange in the US after that. Sold my businesses and bought a bunch of Bitcoin, lost it all in FTX. As in, I was essentially retired, moved to Spain, which is where I am now, in Barcelona. I was essentially retired and then had to come back into the game to make it all back again after FTX. So I ended up joining after the FTX episode. I joined Alpaca to lead crypto and build out their exchange, the derivatives exchange and their spot exchange. We have licenses out of the US and Bahamas on the crypto side, but we're more well known for our securities business. So we're a Series C funded company. We have, out of YC 10 years ago, we've raised over $180 million. We are very close to profitability, doing very large volumes on the security side. So we're a broker dealer, and we have SEC registered broker dealer, self-clearing at the DTCC. And we're one of the very rare US companies that managed to hang on to our crypto business throughout the Biden reign of terror. And we came out of it, with our licenses and with a crypto business attached to the broker dealer. So we are very unique in the sense that you can basically trade crypto and securities from the same wallet. And we provide two products, a B2B product and a B2C product. So you can sign up today as a trader to Alpaca, go to alpaca.markets. You can almost instantly start trading as soon as you've KYC'd. And we have one of the best APIs out there for people who want to do arbitrages or algo stuff, or you want to go to ChatGPT. If you ask to build a trading bot, they're usually recommending Alpaca as out the box. It's the most well-known API. And yeah, on the other side of the business, we offer a B2B product, which is if you're a fintech or a bank or a financial institution around the world, you have your local licenses. We provide all the infrastructure and plumbing for you and liquidity to provide a Robinhood-like experience, let's say, in your local market. So yeah, kind of an infrastructure product.
Very cool. Well, we're super excited to have you and your experience with us today on the show. We're got a lot of great questions we're going to ask you. And if ChatGPT recommends Alpaca, it's got to be the real deal. I mean, I always trust maybe a little too much our robot overlords, but that's very exciting. And we're excited to have you on the show today. But you are not our only guest. We have another person joining us today to talk about the news and the craziness of today's exciting all-time highs, which I think we're all kind of buzzing about right now. I don't know about you. Arush, but we're ready to get started. But just a sec, because our next guest who's joining us is no stranger to building bold things from the ground up. He co-founded Lemon Cash, Argentina's largest crypto platform with over 2 million users, helped raise $45 million in funding, and now he's out to build something even bigger, a 24/7 Bitcoin capital market for the world. He's the co-founder of Roxom and RoxomTV, a Bitcoin evangelist, a global speaker, a World Economic Forum global shaper, and apparently a guy who climbs literal mountains when fintech isn't challenging enough. Please give a big blockchain report welcome to Borja Martel Seward. Borja, it's always great to have you on the show. Welcome back. How are you on this beautiful all-time high morning?
Thank you, Hank, and thank you, Arush, for being here. I feel like you just presented the president of Mars, man.
Yeah, exactly.
I feel very flattered. Thank you. Yeah, no, super good to be here. And Arush, lovely to have you here. Actually, it's funny that we are doing this chat during Bitcoin all times high. Actually, today we hit almost 119,000. So what is it like? What can you tell us about like leading Alpaca crypto in these times, right? I mean, you come here, you guys have announcements, you guys are building amazing stuff, and we have Bitcoin at 119K. So
Yeah.
what's up with that?
Look, man, I'm just happy that the founders had the vision to hang on to the business when everyone was telling them to like just let crypto go. You're a US business, you can't get banking. We had when I joined, we had 4 banks shut down. Like they shut our accounts. And it was like we were in survival mode for a long time. But the founders were, they really believe that crypto infrastructure is going to reinvent the financial markets, and it's going to be very important for us to play a role. And now that's happening. It's a crazy time now because not only are we obviously Bitcoin all-time high, this narrative around tokenizing everything is actually no longer sounding like bullshit and actually kind of happening. So we're at the beginning innings of it, and like we're deep in it. We've managed to secure somehow a large percentage of the market share of those token issuers are actually using Alpaca as a custodian and broker to purchase and to sell the underlying securities of these tokenized assets. So yeah, we can get into that if you want to learn more.
So yeah, like last week, Gemini announced, or 10 days ago, Gemini announced that they were partnering up with Dinary for their tokenized shares product, and it happens to be, Hank, that guess who's behind Dinary? Well, Alpaca. So please, guys, if you can explain more what's going on. I mean, this is huge news. At the end of the day, Gemini is offering tokenized stocks, and the company is pulling the strings in the back end is actually Alpaca. So what can you guys tell us about that?
Yeah, that's right. So Dinari is one of our customers on the security side. We've been working with them for a long time. They've been building this technology, and it's just like all the stars have aligned now, and like Robinhood came out and made their big announcement. Xstocks made the announcement on the same day. So it's all happening now. So they've recently launched with Gemini their tokenized stocks. They're called D shares. Every one of these tokenizers, they all have their own flavor of like what they do differently. Dinari is focused on regulated markets and providing a really slick solution, especially around corporate actions and having the underlying rights to the underlying shares. Others who are more interested in just the price exposure, they don't give you the underlying rights to the underlying shares, and they just basically package it up into an SPV, and you take an equity piece of the SPV. So I think what's happening now is we're gonna see, I think, different niches open up for different kinds of tokenized assets. So like there'll be 10 different types of Apple out there on various different chains and exchanges. And each one of them will be good for a particular niche market. For example, in the US, you need something really specific. Like Denari are securing a kind of like an authorization or like a no action letter from the SEC saying we won't sue you for doing this. So that allows them to operate in the US under a broker-dealer license. Xstocks, which is the one that's on Kraken, Bybit, um, I think some other exchanges. I don't know if I'm allowed to say, but they've managed to get a lot of traction in the sort of gray market exchanges or the crypto exchanges. Um, and those guys are registered in the EU. Uh, so the Kraken tokenized shares trade out of the EU business. So they have their own like regulatory niche. Yeah, so then there's Ondo, and then there's like various other ones that are coming up. So yeah, it's an interesting
Cool. Yeah.
interesting place for us to play because we're holding all the underlying shares, right? So as I said, there's gonna be like 10 different types of tokens or more. It could be hundreds of thousands, hundred. Sorry.
So, guys, are we breaking up here? What's going on?
I don't know. I just saw some like weird thing go across my screen. Um, I was just explaining how if we're gonna have 10 different types of tokens, right? Let's say you got the one underlying share of Apple, but you've got like App D Apple, you got like Hondo's version of Apple, you've got Apple X. We're the ones who in this industry who can stitch together that fragmented liquidity. Okay, so that's our role in this future world of tokenized stocks. We're going to be able to provide you a swap facility, kind of like when the euro dollar started to become really popular. These are dollars that are not issued by the Fed, right? They're dollars that are there's like a basket of currencies that some offshore bank started lending dollars out of as collateral, right? And then it got so big that there was the financial collapse, and then the Fed had to come in and provide a swap line for these euro dollars to be swapped to Fed dollars. And so essentially what euro dollars are is a very similar thing. It's like a wrapped dollar. And we play that exact same role in this tokenization world, where we can actually provide that swap facility to the original underlying security, no matter what fragmented version of the token you have.
So, Arush, essentially what you're saying here, because I think that this is really, really cool, and Hank, this is very interesting. What you're saying here is that you guys will be basically sticking together all the different Apple shares that we have out there. Are you saying that Alpaca is building the infrastructure that will allow for all of these, let's say in the Apple example, for all of these Apple shares to be fungible, let's say, and for
Yeah.
them to be swappable amongst each other? And essentially, would this mean that it doesn't matter how many minted Apple shares you have of D shares or X shares or I shares or whatever, because we'll be able to like put them all together in one big basket? Am I understanding well?
Yeah, exactly. So this even happens now. It's only been a couple of weeks since they've been live. And market makers are like, oh, we're short X stocks, but we have the real stock. Can you guys like help us convert our real stocks into tokenized X stocks? You know, so we would provide that kind of facility. And also, if you're an arbitrager and you have like D shares, you have D Apple, and you need to get it over to Kraken in X stocks form, we would provide that instant swap line for you.
Wow, this is an amazing financial product, and I mean, we will have to talk more after this show, man.
Yeah, yeah, yeah. I mean, this is something completely new, right? No one's ever done this before. We're in a really interesting situation. It just so happened that we are the underlying broker for all of these guys, and it's like a really cool product that we can build for the industry.
Very cool. So, guys, I want to switch gears a little bit. I think we kind of got to talk about the big, beautiful orange elephant in the room, and that's that we got new all-time highs for the Bitcoin price, okay? Borja, I'd like to start with you on this. How is this bull run feeling to you compared to the ones of yesteryear, of 2021, of 2017? This one's feeling a little bit different. What do you think?
Yeah, Hank, to be honest, and I think that it has a lot to do with what's going on and what the Alpaca guys here are doing, which is essentially, like, what I see is that on every cycle, there has been a different buyer. So like in 2011, the buyers were hackers. In 2017, the buyers were like, we already had some kind of VC funds and so on. Then in 20 and 2021, we started having the first companies and maybe larger players. And today we have sovereigns and massive public companies. And now we even have the Bitcoin treasury stock and the Bitcoin treasury companies mania. And essentially what we're seeing is finally traditional markets, TradFi, mixing up together with crypto. And this is like the ultimate inflow, right? If we mix TradFi markets and sovereign funds or institutions, then that's like the one of the biggest capital pools, and now all of this capital is accessing Bitcoin. And actually that is why what Arush and the Alpaca team here is so important, what they are doing, right? Because they represent what Alpaca is doing. In my eyes, it represents this conjunction and this intersection of like traditional capital coming into Bitcoin, coming into crypto, the Bitcoin treasury stocks, an amazing product that we're working together with Alpaca, and how to offer that and the access to all of these companies who are also buying Bitcoin and creating a huge Bitcoin buying pressure. Right. So I do believe that in general terms, like Bitcoin cycles are, or what I've seen is that there is always a new buyer, and I think that this cycle we've hit like the ultimate quality buyers, which is actually sovereign funds, sovereign institutions, and ultimately a traditional capital like TradFi capital, TradFi markets, and it's a pleasure to be seeing how again I think that what Alpaca is doing right now is the crystallization of this entire concept of TradFi jumping into Bitcoin and crypto.
Yeah, and Arusha, what have you noticed from your seat at Alpaca? How is this bull run feeling to you compared to the ones of the past?
I think it's totally different. We have, from what I'm seeing at least, the context, you have to look at the context of the 2021 high versus where we were at just like a couple of days ago. When Coinbase like publicly listed, and there was just like that dump, I think that was really the end of public interest in that phase of the bull market. And then we had this echo bubble essentially that was fueled mostly by the GPTC leverage and 3AC and all of that fraudy stuff. And that's why then, we couldn't really break through 64K with emphasis because it was all just like insider money and leveraged. And then, when we reached that level again, or like around, and we broke it, and then we're still kind of sitting around 99, 100K, it did feel completely different, right? It didn't feel like that time whenever it was all like leverage fueled buying. You have real new money coming in. You've always got the sailor infinite bid, and you can kind of see that in the charts and the order books when it's happening. But it seems to be like a bit more than just that now, And I think, that we've really kind of crossed the chasm.
This question is for Borja. Why do you think that this particular cycle we've seen Bitcoin be such a dominant force compared to all the other alts out there? Normally, we see those alts move in accordance with Bitcoin, at least we have in previous cycles. In our last Bitcoin high of last cycle, I think Ethereum itself went up to close to 5,000. It's sitting below 3 right now, even though Bitcoin's reached new all-time highs, almost double of the previous cycle. Why do you think that altcoins are lagging behind so severely this time?
Because Bitcoin is a true one big massive force, and at the end of the day, Hank, like Bitcoin is the only digital currency in my eyes. Again, this is a personal opinion, but in my humble opinion, Bitcoin is the only true a digital currency, digital asset that has actually won its battle. So all of the other, all the rest of the altcoins and the cryptocurrencies, they are competing in some way or another. You have L2s competing for this, for that, for specific purposes and so on. And Bitcoin was born for something very specific. Hey, we are peer-to-peer digital cash. Our goal is to be incredibly secure, is to be immutable, is to be unstoppable. And the truth is that Bitcoin has one of that. Bitcoin is an amazing store of value. Bitcoin is immutable. You cannot stop Bitcoin. Bitcoin is a most secure and strongest network and energy network in the entire planet. And you know, it just won. And I think that the market is recognizing that. And this is despite of Bitcoin's lack of technological advances, because if we analyze Bitcoin from a technological perspective in terms of capabilities, Bitcoin cannot have like ERC20s. Bitcoin, I mean, and people are finding ways, but Bitcoin wasn't built for that. Bitcoin wasn't built for a infrastructure of tokenization and smart contracts and this and that. Bitcoin was built for a different purpose, but Bitcoin is perfect for that purpose, and it just does an amazing job. And again, the market is recognizing that. Then on the other hand, for the altcoins and other cryptos like Ethereum, well, Ethereum is competing with Solana, with Cardano, with other blockchains, and really the altcoin space and the other currency space is just, they are all competing, and you don't have clear winners, you know. Whereas in Bitcoin is the first, is the best, is the most secure, is the strongest, is the highest market cap, is the one that is the only one that has a fixed supply. And you know, it's very hard to compete against Bitcoin. I mean, I think that the rest of the currencies are competing amongst themselves, not against Bitcoin. I don't know what Arush thinks, but
yeah, man.
Yeah, I was going to ask Arush, do you think that's kind of a sign of maturity in the Bitcoin market? We're kind of separating them as two things now. There's Bitcoin and then there's everything else, and people are maybe chasing those big alpha plays in the altcoins a little less and sticking with the one way, the true, the light that is Bitcoin. What are your thoughts?
Yeah, I totally agree. I think Ethereum had this issue and all these other L1s, you know, that competing against each other. I mean, I think this cycle was like the barbell strategy was Bitcoin and memes. And if you missed the memes, you know, and you went with the L1s and like you tried to do the legitimate, or like so-called legitimate crypto stuff, you got burned hard. So I've always looked at Ethereum as an unproven experiment. I still think it hasn't really figured out what it's doing correctly, because all of these L2s, they're like constant sell pressure on Ethereum, right? On ETH. Like they all earn their fees in ETH, and they just want to immediately sell that ETH, right? So the more successful these L2s are, the more sell pressure there is on ETH. So I don't see how it can ever be a store of value like Bitcoin. It's more of a compute currency. So I think people are starting to realize that, I guess, about Bitcoin. I don't think people have truly understood the dynamic of Ethereum and all of the L2s and L1s and what they're for. I think it was what became clear was like, okay, memes work, Bitcoin works, all the other stuff is like a bit of a mess to me.
And one thing we've seen this cycle, guys, that can't be ignored is the incredible inflows we've seen into the ETF marketplace. Especially with Bitcoin, it's been massive. BlackRock's IBIT, for instance, I think is like the fastest growing ETF of all time. Borja, do you think that this ETF momentum for Bitcoin is sustainable, or is this kind of a short-term hype thing right now?
I mean, Bitcoin is the fastest growing ETF in history, so I think that it's just unbelievable to see the results. I do believe that everything is cyclical. Earth is cyclical. We have summer, spring, autumn, winter, and I think that we are in the middle of, like, since the ETFs started, the only thing that has been happening is the ETF AUM has been up and to the right. I do think that we will continue to see this. We will have drawdowns and we will have outflows, and that is a natural thing because it cannot be only up and to the right. But I think that in the mid long term, Hank, yeah, I mean, this is I don't remember who said it, but a funny meme I like is Bitcoin is only going in the long term. Bitcoin is trends to infinity. So what can we say?
It sounds like a Michael Saylor thing if I've ever heard of it. Arush, in regards to the ETFs, we're seeing all this money flow into ETFs. We're seeing obviously big corporations, corporate treasuries like Strategy, just scooping up Bitcoin left and right. Do you feel like all of this institutional money is helping or hurting Bitcoin's long-term decentralization? Like, is it kind of going against the original ethos of Bitcoin, or is this kind of an inevitable thing that was always going to happen and in the long term will actually help Bitcoin going forward?
Oof, man, that's a tough question. I don't want to step on the purists' toes.
Sure.
I don't think the kind of like separating money from state and like the really the sort of cypherpunk ethos was gonna last that long, right? Okay, it worked really well in the beginning, but now Bitcoin has become a real legitimate financial asset on a global scale. I think that only helps everybody in the network. I don't think, because there are people who are just like, oh, 1 million coins or whatever are custodied between Sailor and the ETFs. I think it's over 1 million now, right, between the two of them. And yeah, it's the fact of the matter is, people like the ETFs are not a bad way to hold Bitcoin. For your general person who's like can't even trust themselves with their own passwords, like they can't be holding 24-word seed phrase and be comfortable, right? They're gonna need some kind of security, like some kind of like backup, and paying whatever it is, 21 bips. I don't even know what IBIT's cost is, but paying that small amount of bips per every year to hold it in an insured, like SIPC insured account, that's pretty good value for money. Now, when I was talking with the Kraken team about this, and and how Coinbase holds, like, I think they hold 8 of the ETFs, like they're the custodian, and like maybe that is a pretty big risk, because what if Coinbase screws up their custody or keys, or they do something accidentally, right? That's a ton of Bitcoin that's going to disappear, and a lot of people are going to get hurt. So that, I think we do need to have we need to decentralize the custodians a little bit. I think that's a little bit dangerous.
Yeah. And Borja, as Arush mentioned, we're seeing a lot of these big corporate holders. Strategy has close to 600,000 now. And now we see all these other like companies following suit with their own corporate treasuries. So it begs the question, do you feel like institutions are finally starting to get the whole Bitcoin thing now? Or are they just kind of playing copycat, seeing strategy, saying, hey, it's working great for them, we should do this too? Or was this actually just part of a bigger movement that we're seeing in real time?
What I can tell you, Hank, is that for me, most definitely in 10 years, if you ask me, is Apple going, or Apple, Microsoft, JP Morgan, and the big companies of the world, are they gonna have Bitcoin in the next 10 years? I believe so. And yeah, right now we're in the middle of a mania, of a fever of Bitcoin treasury companies popping out all over the place, all over the world. I do think that these big corporations in the next 10 years, they will most definitely have Bitcoin in their treasury. I do believe, though, that right now we are in like a kind of FOMO and mania phase. This will stop, but then again, this will catch up. And again, if you put a gun to my head and, hey, is Microsoft gonna have Bitcoin in the next 10 years? 100% positive.
Should I tell you something really crazy? Yeah, I'll tell you something really crazy about this Bitcoin treasury thing. We just got notice from some of our regulators in the US that they've adopted this standard for like backing, or basically having your net worth of your company, if you're doing digital asset trading in the US, has to be 3% of the volume that you custody for your customers, right? Like you have to have at least that much net worth, tangible net worth. And that excludes intangible stuff like goodwill or brand equity or whatever. So it's like you need to have that much cash or some kind of net worth in your business. And if you think about it, like the large majority of people hold Bitcoin, or the assets are correlated with Bitcoin, right? So Bitcoin's going like this. Your AUC, like assets under custody, is going like this against the dollar. And so we as a business are perpetually short Bitcoin unless we hold 3% of our AUC in Bitcoin, right? So I don't know if the regulators thought about this in advance, but that regulation is making us hold Bitcoin in treasury.
That is very interesting, Arush. That is very interesting. And sorry, Hank, but I have a question to Arush because it's very related to this. Arush, last week you guys announced, yesterday or 2 days ago, you guys announced an M&A, and a very important M&A that is yet to be approved. But can you please tell us about that, and mix with that, like, what's Alpaca's vision right now? Because you started off in one way, and now I see that you're going very, very big on this. So, like, what would you say is the vision for Alpaca, and how is this M&A that you're currently going through? What does it mean and represent for your plans? With Wealth Kernel.
Okay, yeah. So Wealth Kernel is a really awesome business out of the UK and Spain. They have a license. They have a really, really solid license in the UK. It's one of the top custody licenses you can get. And they have like some really good B2B clients. They offer like the same kind of business that we offer in the UK, where you can do custody and trading of securities, B2B infrastructure to provide the liquidity and everything. Same thing we do. And then in Spain, they have a MiFID II license for the same thing. So Spain is obviously really well-respected EU territory. I'm in Spain right now, actually. And yes, really solid license. And we plan to use those to expand our offering natively in the rest of UK and EU. Also expand them into crypto. So getting our MiCA license through that. I mean, all of this stuff is subject to regulator approval and change of control. So we have a lot of clients around the world. A lot of we're often in process, bidding for business in Europe and the UK, and this has kind of been a sticking point for us. And so that's no longer going to be an issue. We have really top class licenses out there.
And what exchanges will you be able to offer? Are you going to be able to offer all of the Euronext? Are you going to be able to offer London Stock Exchange, London Metal Exchange, Acquis Exchange? Like, what are you going to be able to offer to the world?
Good question. I'm not part of the securities business. It's very separated between crypto and securities, so I wouldn't know the answer to that question. But I would assume you can go onto Wealth Kernel's existing product and see what they offer. It would be very similar to that.
Interesting.
I think they're
And
really good around the tax wrappers, like
yeah.
ISAs in the US, in the UK, stuff like that.
Okay, and regarding the vision, because
Yeah.
like I mean,
So
what you were saying about the tokenized stocks and everything, like it sounds
yeah.
amazing. So like I wonder what the grand vision is, because vision is something that always evolves, right? So
Yeah. Well, I mean, like verbatim, our mission statement is to democratize access to financial markets around the world, to everyone in the world, right? So we see, in terms of the vision, we see crypto technology as a value settlement technology, right? It solves this settlement issue that we have in the TradFi system. It reduces risk. Um, we've seen the Robinhood blow up, with GME. We saw the London Metal Exchange blow up with nickel. That all had to do with the settlement issue, right? The counterparties in the trade, when the price moves, because there's so many counterparties in the trade, before the trade closes, the price can move and someone doesn't have the money to to settle the trade. So crypto is the solution to that. It's an instant settlement technology, peer-to-peer. And so we know that in order to like grow this TradFi market around the world, we're going to have the crypto technology to back it. And we see ourselves right in the middle there that stitches the two technologies together, and provides liquidity across them, provides the pipes and the infrastructure for everyone to build their businesses across both TradFi and crypto. It's not like everything's going to switch to crypto rails immediately, right? With the TradFi rails are actually really good at certain things. And for example, insurance, like SIPC insurance is a really awesome product. You can safely put your securities and your cash, like FDIC insurance, for example. Like I think Alpaca is probably one of the only places where you can trade crypto and have your cash in FDIC insured account. So that alone is like an example of how our company thinks about, blending both the traditional and the crypto side of the world.
yeah,
I think
getting the
this is
best
still
of
going to
both,
exist.
right?
Yeah, exactly. You're going to need both. And, trading is we've seen with all of these like L2 on-chain trading apps, we've seen that even the crypto industry is like coalescing around off-chain matching, because these blockchains they're terrible for high performance, low latency, FIFO queues of matching engines, right? They can't do it very well. And they're slow on purpose, because they're slow because they provide that guarantee of, distributed system guarantee of like um not.
Oh, we lost him now, Hank.
Hey guys, I think, did we just lose Aruj? I think we're having some technical difficulties. Might be a meteor
Yeah, we
shower
lost
over
him.
in Barcelona.
Really
We lost
terrible
him.
matching.
Okay, well,
Oh,
I think
we
got him
lost you,
back.
Arush.
There we go.
Sorry,
Yeah,
man.
we got you back. No problem. But we lost you in
Spanish
the.
internet. Spanish internet.
Yeah,
Yeah.
man. Shit.
The blackouts, dude. I'm getting
Yeah.
blackouts in my building
Yeah.
all the time. Yeah, what I'm
Another
saying is that
quick
we've
question
seen
for
the
you, Aruj.
on-chain industry even coalesce around just like having the matching engines be off-chain, because the blockchains suck at doing matching, at what is trading basically. And so the TradFi world, the on-chain world, they're like learning the lessons that we've already learned in the TradFi world, right? Matching needs to happen off-chain. It has to be separate from settlement, okay? And that means you need a central counterparty to be your trading engine. And then when you introduce margin, whenever you introduce leverage and margin, you have to have a central counterparty to be in control of the collateral in order to do the liquidation. And so this centralized like trading in the trading world, you're always going to have a centralized counterparty, and that's always going to exist. So it's not always going to be peer instantly settled trades.
Interesting.
Amazing.
Now, Arush, I know your time is limited and we got to let you go soon. I do have a quick question though for you. This has been, as we talked about, an unusual year in the Bitcoin cycle process. And Borja mentioned about sometimes you having to refocus your vision. How has your vision, if at all, changed during this last 6 months for Alpaca? We've seen a lot of new regulation, guardrails in place, a lot of new innovation because the floodgates have kind of opened. Has Alpaca had to shift their focus at all in the last 6 months, given all the new developments in the crypto industry that we've seen?
Sorry, could you repeat that? I think I'm cutting out one more time.
Oh, yeah, no problem. I was just saying, as we spoke of earlier, it's been a unique year as far as the normal Bitcoin cycles go, especially the last 6 months. And Borja had mentioned about Alpaca's vision for the future. Has that vision shifted or changed at all in just the last 6 or 7 months as we've had this onslaught of new developments?
Right. So I think it was more like we hit the pedal to the metal as soon as Trump came out with all of the kind of sweeping guidance. And even then, we still didn't know if it was legit, like if they were actually going to follow through, right? Because in November, he was all crypto, yeah. And then when January came around, we were still kind of waiting. But then when we started seeing all this guidance and every agency under the sun started releasing guidance, then we were like, oh my God, we need to move extremely fast. And we were ready. We were kind of waiting. And so, we accelerated significantly when that happened. And, we're a US business as well. So this guidance was to benefit US businesses and the US economy. And I think we're seeing that happening.
Yeah, amazing. Now, Arush, I think we got to let you go. I think you have to get out of here at 9. Is that right?
Yeah. I got family to take care of now.
Of course. Before we let you go, really quick, I'm sure we have plenty of people in our audience being like, I need to learn more about Arush and everything they're doing over at Alpaca Markets. What's the best place that I can send them so they can learn more about you and Alpaca?
Yeah, the website is alpaca.markets. You can contact me, arush.segal@alpaca.markets. We have very well-staffed support. So customer support, you can contact us on support@alpaca.markets if you have any questions. You can open an account. That's the best thing to do, is just go to the website, click on Trading API, click on Open an Account, and you're going to get pretty much real-time support to help you get through the process of opening an account. We're really, really quick. And
Amazing.
We'll be happy to help.
Well, we certainly appreciate. So everyone definitely check them out. Check out Alpaca Markets. We certainly appreciate you taking the time to join us this morning. But we're going to let you go because I know you said you got fam to take care of. We know how that goes. So thank you again for joining us this morning. We hope to have you back soon because I need to hear about these FTX stories. I think
we'll talk about that another day.
Yeah, exactly. All right. Well, thank you so much for joining us, Arush. We're going to take a break, but when we're back, more blockchain report. Borja's going to stay with us. We're going to talk about some stories. So stay tuned. All right, it's 9:05 a.m. on this Friday, July 11th. Bitcoin sitting right beneath 107K. We're still joined by Borja Martel Seward, who's going to join us in just a sec as we talk over some of these stories in our bull run. But let's get into it because we got a lot to cover. First up, Bitcoin, as we know, has officially body slammed its way into new all-time highs, exploding past 118K early this morning and turning the crypto markets into a liquidation bonfire. In the last 24 hours alone, over $1 billion worth of shorts got ejected from existence. More than $570 million of that pain was Bitcoin specific, with $415 million wiped out in 1 hour. Pour one out for the bears out there. There you go. Now this surge isn't coming from the usual suspects either. Spot buying? ETF inflows? Solid, but not the main driver here. This move was fueled by futures degeneracy, specifically a rising futures cumulative volume delta, or CVD, which measures the gap between buys and sells. That gap, well, it's widening faster than the US deficit. Bitcoin futures open interest hit 707,000 BTC, over $82 billion, with low funding rates suggesting that this isn't even a crowded trade yet. Or in other words, degens haven't even gone full degen. Meanwhile, spot ETF flows have been quietly doing laps around the financial industry. Cumulative net inflows into U.S. spot Bitcoin ETFs have now crossed $50 billion, with BlackRock's IBIT alone managing $77 billion in assets. To put that into some perspective for you, it took the world's biggest gold ETF 15 years to hit that number. IBIT did it in under 2. And now it holds over 700,000 Bitcoin, which is more than 80% of all BTC held by public treasury companies. As WonderFi's founder simply puts it, this surge in Bitcoin comes down to there being more demand than there is supply. Here's what he had to say on CNBC. Let's take a peek.
And with, there's 21 million Bitcoin that will ever be created. And I think you're seeing larger inflows coming from ETFs and this wave of Bitcoin treasury companies that is buying billions of dollars of Bitcoin or raising capital to do that and executing those purchases. And then you're also seeing still tailwinds of US policy changes, the strategic Bitcoin reserve. And then I think a big piece also is this overhang that we've had of regulatory uncertainty in the US, which is starting to lift and is encouraging more M&A and transactions in the space. So I think it's, Bitcoin's already been the best performing investable asset in the last 10 years. I think it's still just getting started at 112,000. And it's also really encouraging to see companies like MicroStrategy continuing to perform extremely well. Also the best performing stock in the last 5 years. I see Bitcoin going much higher from here.
Right, so I take it you do think this momentum will continue. What's your outlook for Bitcoin in the second half of this year? Do you think the cryptocurrency will continue to notch new records? And if so, what will it take exactly?
I think we're just going to continue to see Bitcoin go higher from here. I think, 150,000, maybe 200,000 this year. Obviously, we'll see pullbacks along the way, but I think that just going back to the supply and demand, we're just going to continue to see more purchases and more ETF inflows, and I think that's just going to continue to support Bitcoin price in the rest of this year.
All right, bringing back Borja. Borja, Bitcoin, all-time highs. They're saying it's not retail. What do you think is really driving this latest Bitcoin surge to all the way up to 118K?
The sad realization, Hank, that money is politics, and that I think that the world is at least, I don't think that the world is going full into this, like maybe Arush was mentioning it before. I don't think that the world is yet full in, hey, decentralized money, separating money out of state and so on. But I do think that this concept of digital gold is penetrating Wall Street, and not only Wall Street, but the Wall Streets of the world. And I do think that, we won't have sovereigns. The U.S. will, the U.S. already has a Bitcoin strategic reserve where, at least for the time being, they are not selling Bitcoin. We are yet to see if there are any upcoming purchases. You already have very large institutionals. BlackRock, at the end of the day, IBIT, it's good, well on track to become the largest ETF, which means that IBIT is well on track to be the largest or one of the largest revenue sources for BlackRock. And by BlackRock, we're talking about one of the largest financial institutions of the world. BlackRock manages most of or has a big market share in asset management and ETFs and financial products for the biggest fortunes of the world. And what Larry Fink is saying today is that we should all buy Bitcoin, that Bitcoin is digital gold and so on. And this is what Bitcoin has, right? Bitcoin, the good thing about Bitcoin and the nice thing about Bitcoin is that when you're a Bitcoiner, you have plenty of people who are working for you. And what I mean that they are working for you is that every person that is selling Bitcoin is actually working for us, Bitcoiners, right? And what happens today is that you have one of the best salespersons ever, which is Larry Fink, aggressively selling Bitcoin and also the rest of the Larry Finks of the world. So what I think is you have the most important asset managers and financial institutions who are looking at Bitcoin, and the case they are doing for Bitcoin is that Bitcoin is digital gold. It's a scarce asset, immutable asset that cannot be stopped, an asset in which plenty of sovereigns will be interested. And I think that big money is just taking a small bet. I mean, this is just the tip of the iceberg. We're not even like we're not even seeing the 3, 4, 5, 6% allocation that BlackRock is recommending. So imagine what the market will look like when we actually reach 6% of Bitcoin position in all of the portfolios across the world. I mean, so this is what we're seeing is slowly big money and capital in general is starting to increase the allocation on Bitcoin, and this is merely the tip of the iceberg, Hank.
Yeah, and you mentioned BlackRock a couple of times, specifically Larry Fink. Now, for those of our audience out there that aren't familiar with Larry Fink, how big of a deal is it that he is now endorsing Bitcoin? I mean, only 5 or 6 years ago, this is a guy that wouldn't touch it, and now he's actively acquiring it, telling other people to acquire it. How big of an inflection point is it that Larry Fink is now pro-Bitcoin?
It's huge. It's basically one of the most important persons in finance saying that you should most definitely own Bitcoin. The official recommendation from BlackRock is from 4 to 6%, and there's even like lower tier analysts also from BlackRock who are recommending a 20, 30, even 40% allocation, right? So basically, again, we have an amazing ambassador who is in touch with the most powerful people and persons in the world, and Larry Fink is giving the buy signal, you know. This is big. This is not big. This is huge. Really winning Larry Fink as a Bitcoin ambassador, because that's what he is a huge win for Bitcoin. And I just think it's normal, Hank. You know why? Because at the end of the day, Bitcoin's case is real. I mean, if you objectively analyze Bitcoin, and this is exactly also what Larry Fink says, but it's what we all already know, Bitcoin is a scarce, neutral, immutable, unstoppable asset and currency. And there's no way anybody can beat that, because we all know how Bitcoin works. We all know how it's going to work. We all know what to expect. We all know that nobody controls it. We all know that you can use it in whatever form you want. And today, it's the most liquid asset and currency in the entire planet. I say asset and currency because some people view it as an asset, other people view it as a currency. So whatever you like the most. But at the end of the day, Larry Fink is the first of many very important ambassadors that Bitcoin is yet to win. I'm still waiting. Already Jamie Dimon said that they wouldn't stop their customers from buying Bitcoin, and that they would actually help their customers to buy Bitcoin. I'm still waiting for the day that Jamie Dimon says, you know what, guys, I capitulate. I bought my Bitcoin fair share, and I'm in this journey with you guys, which I think we will eventually get there.
Yeah, if time is any indication, it's any of these big players in the space, once they do the research necessary. I mean, Michael Saylor wasn't initially an orange pill guy. He did the research, and now he's the biggest advocate probably in the world. We saw Larry Fink, same pattern. I think Jamie Dimon's just going to be another domino to fall in that line. We're just kind of waiting. It's a matter of if now, or not if, but when at this point. Now, Borja, we just reached all-time highs. Sentiment is high right now. With that being said, what kind of moves do you expect from Bitcoin in the next few weeks if this current momentum keeps up? Could we see some prices, 150? I mean, there's a lot of price predictions out there for the end of the year. Where do you see this momentum taking us in the next weeks and months?
Yeah, Look, Hank, when we were analyzing our positions last year regarding Bitcoin, we were thinking about, hey, where can we actually get? And we were at a Bitcoin price of 50,000, 60,000. What we saw and thought is that, hey, we may actually get to 120, 150, and maybe like an amazing slingshot, we could do 200. I am still sticking to that thesis. I do think, like right now, 120. Actually, I had my reminder to start that I said last year to start watching the market again regarding potentially considering taking profits and so on. Like 2 weeks ago. I do think that we still have room for some nice further up legs, let's say, and continued growth. I do think that from the range of like 150 to 200, we are in the banana zone. And I mean, we always need to remember that we started off in early 24, mid 23, so let's say 2 years ago. In the last 24 months, we've gone all the way up from 15,000 to 120,000 now. We're probably going to 150. That's a 10x. That's a 10x, 900% increase in just 24 months, which the math is 900 divided 24. It's a 37% not compounded per month, which is just like by the time we reach 150 and 200, we will be, I believe, again, this is all of my opinion, not financial advice and so on, but I think that from 150 to 200, we're in the banana zone and in the more irrational zone. But again, at the same time, irrational for traditional markets, because also if we analyze from another perspective, I mean, the dollar is getting completely debased. We have inflation. We have a huge, humongous debt, 37 trillion. This is continuing to grow. And at the same time, like the world is giving us all the possible excuses to just continue going through the exit door that Bitcoin represents on the fiat system, right? So it's very hard to tell what is banana and what is not, given the current conditions of the world and context and the wars and the inflation and the debt and the money printing and so on.
Yeah. And you mentioned the last 24 months, we've seen a lot of changes in the industry, in the price. My question for you is, what are you seeing, if any, or are you seeing in terms of shifts in how Bitcoin is being used or talked about right now as opposed to 24 months ago? Because it seems like we are worlds away from where we were back then.
Yeah, well, Bitcoin 24 months ago was dying. That's what contrarians were saying, that we were all dying. It's like, okay, the bubble popped. This is going to zero finally after 15 years of crap. This shit thing is finally going to die. This is what contrarians were saying. And guess what? We now have Larry Fink selling Bitcoin. We have sovereigns buying Bitcoin. We have countries building up Bitcoin strategic reserves. And this is Bitcoin, Hank. You know, I've been in this space since I was a kid, since I was 14 years old. I've seen this plenty of times. Bitcoin is volatile. Bitcoin goes up. Bitcoin goes down. It's not for everybody. But I believe that it's clear where the world is headed. It's like we cannot deny the fact that the world is more digital every single day. And again, for all of those detractors, I just think that maybe it's the lack of vision, maybe it's pride. Like again, how can we explain that Jamie Dimon has been saying that Bitcoin is a scam ever since? Like, how can we explain a person defending a position that, hey, this is a scam ever since it was like $10, and now that it's still $120,000 almost, he still cannot capitulate and say, you know what, maybe I was wrong. I'm not even saying that he should say I was wrong. I'm even saying that he could just say, maybe I was wrong. Maybe I was wrong. And we didn't even get there, So, and again, I have a good friend and our chief of staff that always likes, Max, who always likes to say that hyenas come and feed onto the dying lion. And I think that this will continue to happen. When we get Bitcoin going down, hyenas will come and will again say that the bubble has popped, that the tulipans have popped again, that we're all going down to zero. What a mistake everybody has done, and the cycle will repeat. And I'm completely sure that in less than 10 years, Bitcoin will be worth more than $1 million. So, this is just part of the game.
100%. And I think if history has anything to say about it and it repeats itself, Jamie Dimon will be changing his tune soon enough. Borja, before we let you go, because I know you got to head out, I know Roxom is launching soon. When can we look forward to the start of the Bitcoin-denominated world? Everybody wants to know.
Yeah, man, we're super excited, Hank. Honestly, we're working 24/7 just to ship and get the product live and launched to everybody. We are expecting that in the next 4 to 6 weeks, we'll be able to offer global access to Roxom. So again, like we were talking yesterday, we'll be launching the S&P 500 against Bitcoin, NASDAQ against Bitcoin, gold against Bitcoin, and oil against Bitcoin. So for all Bitcoiners that are watching, it'll be, I believe, quite interesting. We'll be able to either long, short the S&P and the NASDAQ and so on against Bitcoin. I think this is just the start of a new monetary epoch. This is just the start of a new way of understanding things, of looking at things. Again, we already had Michael Berry in 2008 believing that maybe the housing market was going to go down. It eventually, against the dollar, it eventually happened. I believe, like many others, that most of the assets and things are going down against Bitcoin. So we just want to make sure that we can enable people to just give another lens, another optic to markets, to assets in general. And we believe that the best optic, the best lens today is the Bitcoin lens. And we believe that the people who have the best financial well-being in the next 10, 20, 30 years are those who, my name is not well there, but it's fine, Hank. I was saying the people with the best financial well-being, I believe most probably will be those who are putting a Bitcoin lens to their understanding of the world. So what can I tell you?
Yeah, I think we're all looking through orange-tinted glasses right now, and it feels so good. If we got our audience out there that is interested in being part of the Bitcoin-denominated revolution, should they go sign up at Roxom.com? Is that the best place to go and get ready?
Roxom.com, start looking at the charts, understand how the world looks like in Bitcoin, and soon we'll be able to trade it. Like we're launching in our new landing page, Trade the World in Bitcoin. This is what we believe. Invest in Bitcoin, again, built by Bitcoiners for Bitcoiners, coming soon. Just bear with us for a couple of weeks and we'll be there.
Well, we can't wait. We thank you for your time this morning, Borja. And I believe we'll see you next Tuesday as well, right here on the Blockchain Report. Is that right?
That's right. Thank you, Hank.
Rock and roll. Can't wait to have you back. Enjoy your weekend, and we'll see you next week.
Bye. Have a great day, and let's go Bitcoin. Let's go, baby.
Let's go. All-time highs, baby. All right, let's get back to our bull run here, guys, because while we celebrate Bitcoin's new all-time high this morning, unlike past rallies driven by laser-eyed lunatics and meme magic, this one's being seen as a sign that the market is somehow maturing. In fact, Doug Colkett from FOMO said the breakout is evidence of growing liquidity and deeper, more serious participation. Or in other words, the casino is turning into a stock exchange. And the traders are now looking past Bitcoin and toward tokens that solve actual problems and push real volume. So, sorry, Pepe Coin. CEO of Dworo Labs says this milestone reflects institutional confidence, integration with TradFi, and a global hunger for financial systems not run by fossils and fax machines. Basically, Bitcoin is graduating. Cap and gown optional on this one, though, boys and girls. He says that this rally marks the beginning of a new financial era, one where DeFi and TradFi are merging like some weird regulatory rom-com. Tom Bruni at Stockwits, he agrees, saying that this breakout feels real, not a fake out, and that retail investors are still holding strong even as earnings season looms in the foreground here. Now, Bruni notes that the 6-week price consolidation gave traders time to reset emotionally, so this move feels healthier, more grounded, and way less chasing the tail end of a sugar high. And in other news, we got to bring it up here because I got a ton of questions that we didn't use. Here we go. We're back to our next story. And we're talking about Bitcoin's inching its way back to 118K. Currently, I think we're around just beneath 117. But according to the nerds who read blockchains like tea leaves, the party is far from over. Because apparently, no one plans to hit the sell button until we're closer to 130,000. Yeah, 130K. Even at 6 figures, people are looking at their stack like, nah, think I'm going to wait a little while longer. And according to Crypto Quant, their so-called accumulator addresses or wallets that buy and never sell have been absolutely stuffing their faces. They now hold almost 250,000 BTC, which is a 71% increase from just last month. That's the highest we've seen since December, back when Bitcoin was only 97K and people still thought 100,000 was a pie in the sky. So yeah, people are buying more now and at higher prices. Conviction or cult behavior? Tough call, but definitely bullish either way. Meanwhile, the market value to realized value ratio, or MVRV, for the 3 people who actually use that in casual conversation, it's sitting well below the maybe I should take some profits level. Historically, the market starts to top out when the MVRV hits 2.75. That magic number right now equals a price of about $130,900, which means there's at least 17% more upside before the average Bitcoiner even considers the possibility of having too much money. And this isn't just hopium printed on a chart either. Glassnode says the realized cap, now that's the value of coins when they actually move, jumped $4.4 billion as Bitcoin broke above 113K. That, my friends, is not speculation. That's real capital flowing into the market. Or translation, people aren't gambling here, they're investing. And Kyle Reedhead, co-founder of Milk Road and part-time meme prophet, went ahead and called the 150K based on a bullish cup and handle pattern. His response to the breakout, see it 150. Honestly, at this point, it's like, why not, right? Between ETF inflows, the government lighting $3.3 trillion on fire, and Bitcoin becoming the main character in every macro hedge fund's portfolio, there might not be a ceiling, at least not yet. Bottom line here is people are still buying, smart money is accumulating, and no one's ready to take profits until your Uber driver starts talking about sats again. So yeah, see you at 130K, maybe. Probably, maybe 150, or maybe I'll see you on Mars. We'll see how high this rocket ship goes. And in other news, Bank of America, they just crowned Bitcoin the best performing currency of 2025, and it wasn't particularly close. Despite not being backed by a central banker, existing in any physical form, Bitcoin outpaced every fiat contender on the planet, while national currencies flailed under inflation, debt, and political chaos. Bitcoin did what it does best, and it went up and ignored everyone who said it was dead. Let's take a look at a graphic here, shall we? Right over here. So now we can see this is the 2025 cross-asset winners and losers list. Let me see if I can bring it up here on my sheet. It's a little small for me to see right there. Can we, let's take a look. So right now you can see Bitcoin, there we go, we got it, is the number 1 on the whole list. What is that, like 18.7 or something today? It's so tiny, I can't see it very well. 18.2. What's Victor? Chime in here really quick. Can you read us that list here? It's a little small. Your camera's not up yet. That's okay. So Bitcoin's at 18.2, and what's right beneath it there, Victor? So the Swedish krona. Okay, who would have thought the Swedes are doing 13.4? 16.4. Here we go. That's better. Thank you. We got the Swiss franc, the euro, but Bitcoin is reigning very supreme right now by all accounts. And it's being labeled as a currency by Bank of America. So that is a step forward as well. There's a lot to like. I don't know if we're able to check out the other one. I think some of the only assets that are outperforming it this year, I think gold was at 25%. But hey, digital gold, 18 point something percent, ain't too shabby, especially with new all-time highs on the horizon. So we thank you at Bank of America for putting this together and just kind of reinforcing what we already know. And that is that Bitcoin is the way, the truth, and the light. And if you don't believe me, just take a look at our new all-time highs. Kind of tells the tale. And in other news, more and more companies are going full-on Michael Saylor. According to Bitwise, corporate Bitcoin holdings jumped 23% in Q2, reaching 847,000 BTC in total. That's more than double where things stood this time last year. And while MicroStrategy still hoards the lion's share, we're talking over 70% of that stash, they're starting to have some company at the top of Mount Stackmore. A whopping 46 companies bought Bitcoin for the first time in just Q2 alone, including, and this is not a drill, GameStop. That's right, the meme stock of 2021 is now a Bitcoin treasury asset holder in 2025. Somewhere out there, Roaring Kitty is nodding in approval. Meanwhile, Figma, the design software firm now prepping for IPO, admitted it's sitting on Bitcoin, a Bitcoin ETF, and USDC, which basically means its cap table has better crypto exposure than most venture funds. And the story, it gets weirder. A tiny French semiconductor company, Sequence Communications, said "oui" to 370 BTC, and their stock shot up to 65%. They raised $384 million in financing and plan to buy over 3,000 Bitcoin of their own, because nothing says semiconductors quite like parking your war chest in digital gold. Ben Workman at Swan Bitcoin, who's advising Sequence, says the Trump administration's full-on Bitcoin endorsement is helping push this trend. And he's not wrong. Trump Media, they're planning to raise $2.5 billion to build a Bitcoin treasury of their own. So apparently, we're doing this thing. And according to Hashtag's Gary O'Shea, all this corporate FOMO could send Bitcoin to 140K before the year is over. Of course, don't expect Coca-Cola or Warren Buffett to be next, unless the Berkshire Hathaway annual meeting replaces See's Candies with cold storage wallets. That'd be fun. But if you're a fintech or tech-adjacent exec watching your cash lose value in bonds, Bitcoin's growing reputation as a long-term, non-dilutable store of value might start looking less like a gamble and more like a fiduciary responsibility. And let's be honest here, fam, the price impact, well, more corporate buyers means fewer coins on the open market, and fewer coins means supply shock, which means price goes up. And wild idea, we might actually, in fact, still somehow be early to all of this, even at 118K. Wild world. And Strategy, couldn't go a show without talking more about them. They're nearly sitting on about 600,000 Bitcoin currently, valued at around $67 billion at today's prices, which in Bitcoin terms makes them basically the Fed. But behind that mountain of digital gold, some pretty analog problems. New SEC filings show Strategy may need to sell some of its Bitcoin, and not because they want to, because Uncle Sam might make them. Thanks to the accounting rule ASU 2023-08, which is starting in 2026, companies will need to report the market value of their Bitcoin holdings, not just the purchase price, which means Strategy's $24 billion in unrealized gains could trigger a 15% minimum tax, even if they never sell a single sat. So yeah, they might owe billions in taxes on gains that technically don't exist yet. And Strategy's filing says it out loud. If needed, they'll sell Bitcoin to pay the tax bill. That's not all. They also have $8.2 billion in debt and $3.4 billion in preferred stock. And those preferred shareholders want their cash like yesterday. Dividends on some of those shares must be paid in actual dollars, no skipping them, no IOUs. That alone totals over $350 million per year in obligations, interest, and dividends. And their software business isn't making enough to cover it. So unless they raise more money soon, selling Bitcoin may be their only move. Oh, and if their Bitcoin custodian ever collapses, Strategy could be stuck in line like a bankrupt BlockFi user trying to reclaim its assets as an unsecured creditor, which is basically the TradFi version of purgatory. Bottom line here, Strategy stock may be enormous, but that doesn't make it untouchable. A bad quarter, a tax hit, or a cash crunch could force them to liquidate, which would certainly rattle the short-term market. But long-term, still bullish, because if Bitcoin survives even its biggest corporate holders panic selling, that, my friends, is not a bubble. That is what we call a stress test. We're taking a quick break, but when we're back, we got more Bitcoin bedlam to follow, so stay tuned. Blockchain Report coming back your way right after this. All right, it is 9:42 on this most joyous of Friday mornings. Let's take another peek at how the markets are doing this morning, just because it's been so great. I'd love to revisit. And it's still looking great right now. Bitcoin sitting at $117,300, up about 1% in the last 24. Isn't it just great to see all of these big numbers? We never actually thought, we thought we'd get here, but we weren't really sure, and now it's here, and it just feels surreal right now. Ethereum hanging out right below 3,000, just creeping below. They're up just 18 bucks in just the last hour here or so. They're looking pretty good. XRP sitting around 277, 278 a coin. Cardano up 7.77%. They're hanging out around 73 cents each, and Dogecoin doing its thing right above 20 cents. Let's get into our next set of stories here with a little bit of AI AIO. Run the stinger, camera one. Let's do it. All right, welcome back. It's time for a little AIO, or this is where we chat about our robot overlords and their eventual supremacy over all of mankind. In today's story, Shark Tank star Kevin O'Leary pulled off a double lariat of buzzwords, Bitcoin and AI. And according to Mr. Wonderful, if America wants to win the global AI arms race, it needs to stop thinking like Silicon Valley and start thinking like a Bitcoin miner. What? Well, because both industries have the same Achilles heel. That's electricity. AI gobbles up power like it's Halloween candy. A single ChatGPT query uses nearly 10 times the juice of a Google search. And while everyone's busy pitching billion-dollar LLM startups, nobody's figured out how to keep the lights on, except Bitcoin miners. O'Leary says they've already solved the hard stuff, running megawatt-scale data centers, sourcing cheap energy, building infrastructure in places like Texas, North Dakota, and Alberta, where stranded gas and political will are plentiful. Mining companies like Core Scientific and Hut 8 are already shifting gears, turning their facilities into dual-use crypto AI compute centers. Or in other words, the same server farm that's validating blocks could soon be training your next chatbot therapist. But while the US and Canada play tariff ping pong, China is stacking coal plants like Lego bricks to feed its own AI growth. O'Leary calls the trade war foolish and says if America wants to lead, it needs to build. Now, whether that's nuclear, natural gas, or hamster wheels remains to be seen. The punchline here? Bitcoin miners are sitting on the exact infrastructure AI needs. If policymakers can stop arguing long enough to plug it in, Bitcoin might end up saving more than just your portfolio. It could save America's technological edge. And if miners get AI subsidies the same way AI startups get VC funding, Bitcoin's profitability could see a whole new chapter. Next up, it's game time. We're running the stinger. Let's go. No stinger. Oh, I love that stinger. That's okay. But it's game time. This is where we find out what's going on for you gaming nerds out there, because the intersection of crypto and gaming is becoming very, very close. Just watch out for the next GTA. You'll know what I'm talking about. But in this news, young Americans, well, turns out they're spending 25% less on video games this year. Apparently, you can't pwn noobs when you're busy dodging student loan bills and living off expired protein powder. According to data from Circana reported by the Wall Street Journal, Americans aged 18 to 24 have slashed their video game budgets harder than any other spending category. While overall discretionary spending for that age group fell by 13% from January to April of this year, video games took the biggest hit of all, down a full 25%. That beat out declines in accessories, 18%, tech, 14%, furniture, 12%, and hope, which is unquantified but presumably also down. Now, this is not a trend seen in older age groups, so Gen Z isn't just broke, they're uniquely broke. The reasons, well, they're not exactly mysterious. Graduates can't find jobs. Credit card delinquencies for people aged 18 to 29 are at their highest levels since before the pandemic, according to the New York Fed. And student loan payments have resumed because apparently someone had to cover those defense budgets and tax cuts. Let's not also forget video games themselves have gotten more expensive. Publishers jacked prices to $80 a game. Console prices went up, and monetization models have gone full Bond villain, aggressive, manipulative, and impossible to beat without a wallet. But here's the kicker. People are still playing games. They're just switching to free-to-play options on hardware that they already own. Because nothing says recession gaming quite like squeezing a little more life out of your cracked Switch Lite. Now, Circana's Matt Piscatella noted that engagement is still strong, it's spending that's what's fallen off right now. So people are logging on, they're just not logging in to their bank accounts to do it. It's also worth noting that the study period didn't include the June release of the Nintendo Switch 2, which admittedly could spike the numbers. And next year's launch of GTA 6 is expected to reset the entire entertainment economy, if not the world, or at least, melt a few credit cards along the way. Meanwhile, the games industry itself is bleeding out like an over-leveled Dark Souls boss. 2,800 game devs have already lost their jobs in 2025. That's on top of the 14,600 cuts in 2024 and 10,500 cuts in 2023. And no, that does not even count Microsoft's latest bloodbath. They've announced plans to lay off nearly 9,100 people, with many cuts targeting gaming. That's in addition to their previous hits of 1,900 cuts in January of 2024, plus the studios they shuttered like Arcane Austin and Tango Gameworks. And don't forget the 6,000 person purge back in May, which was 3% of Microsoft's entire workforce. All of this while Xbox boss Phil Spencer insists the platform has more players, games, and gaming hours than ever before. So if you're wondering how the video game industry can be doing better than ever and collapsing at the same time, welcome to 2025, where the only thing more confusing than the economy is the plot of Kingdom of Hearts. We're taking a break, but when we're back, bullish, bearish, or BS, we're going to recap today and find out how things are looking for Bitcoin as we head into this new weekend of all-time highs. Stay put. We'll be right back with the blockchain report. All right, welcome back. It's time for a little bullish, bearish, or BS. This is the part of the show where we break down the top 5 stories of the day and decide if they're bullish, bearish, or BS and figure out whether it's Bitcoin's going up, down, or sideways into existential dread. Let's recap. First, we got Wall Street reacts to Bitcoin's new all-time highs. As we know, our beloved orange coin hit 118K in the early hours of this morning. And instead of dismissing it as magic internet money, Wall Street is calling the rally mature. Traders are shifting from memes to momentum, and even the suits are starting to act like Bitcoin belongs in a real portfolio. I mean, how can we be anything other than bullish on this news, guys? I mean, right? When TradFi stops laughing and starts allocating, you're no longer the joke, you're the asset. This kind of institutional acceptance adds long-term credibility and deep-pocketed price support no matter what way you cut it. Wall Street's finally in on the joke, and they're buying it, baby. Bullish to start. What do we got next? We got accumulators. They're buying more BTC now than they did back at 97K, and most aren't selling at least until $130,900. That is the level indicated by the MBRV, and it's still not flashing overbought at this point, and realized cap just jumped $4.4 billion. bullish, guys. I mean, this isn't hype. It's hardware while it's getting heavier. The price action has support. It's got conviction and a long way to run before people even think about cashing out their Bitcoin. Buyers are still buying. Nobody's flinching. So I am very bullish on this. 2 bullish to start, 0 bearish, 0 BS. We're moving. Next, we have Bank of America names Bitcoin the best performing currency of 2025, even though it's got no government, no central bank, yet it still beat every fiat on earth. I mean, how can you not be bullish on this? This is the kind of mainstream recognition that accelerates adoption and further cements Bitcoin's role as a global store of value. Even boomers are starting to believe in this thing, for Christ's sakes. Bitcoin wins the currency Olympics game. Again, mark your calendars. Today's a big day. Bullish on that. Next up, we got corporate Bitcoin holdings jumped 23% in Q2, with 48 new companies aping in, including GameStop and Figma. I mean, even a French semiconductor firm raised nearly $400 million just to buy more BTC for their books. Bullish again. Whew, we are hot today. Corporate FOMO equals supply shock, and the more companies convert cash into coins, the tighter the float, which pushes price up fast. Companies are buying like they know something, so maybe you should be too. Not financial advice, but never a bad thing to consider. I am bullish. Last but certainly not least, we got MicroStrategy, or Strategy now. They're holding nearly 600,000 Bitcoin, but new tax rules that'll be starting next year and cash flow problems could force them to sell some of it. That would dump a massive amount of Bitcoin on the market, and it would happen fast, potentially some kind of domino effect in the bad way after that. I don't know. But anytime I hear strategy or Michael Saylor and the word sell in the same sentence, that is giving me some major bearish vibes. In the short term, though, this is a liquidity risk, and if strategy sells even a fraction of their stack, it could cause a sharp price dip in the short term. But the long term, if Bitcoin survives this, it's stronger than ever for it. So it might be some short-term pain, but it offers us a long-term proof of life. All right, let's recap our scores today. We got 4 bullish stories, 1 bearish, and 0 BS, which means today's sentiment is firmly bullish, baby. We bring out the money gun because it's all-time high and it's something to celebrate. Let's be real, fam. Smart money's buying in. Corporates are stacking. Wall Street's waking up. And even Bank of America is giving Bitcoin a Medal of Honor. So it's a bullish day and a bullish week for all of us. Enjoy your new all-time highs. Take your favorite gal out to dinner. Put your dancing shoes on and celebrate, because we don't get these opportunities that often, so we might as well make the most of them when we do. As always, thanks for tuning in to this week's episodes of the Blockchain Report. We're on here every single weekday morning at 8 a.m. PST, 11 p.m. or a.m. Pacific. Make sure to like, follow, and subscribe to RoxomTV and me at Hank at RoxomTV on all platforms you choose to doom scroll on. I'll see you all next week, unless, of course, Bitcoin hits 120K over the weekend, in which case, maybe I buy my Lambo and just drive off into the sunset. We'll see. Either way, thanks for tuning in. HODL strong. We'll see you Monday.